If gold has managed to withstand the challenge of a strong dollar and high U.S. Treasury yields, how high can it soar when these unfavorable conditions change? The World Gold Council, WGC, predicts that demand for the precious metal will remain high in the second half of the year. However, for the exogenous rally to continue, the bulls will need a new ace up their sleeve. The WGC sees this in the inflow of capital into ETFs. When the US dollar is the main favorite in Forex and leads the race among the 18 currencies, and Treasury yields rise due to the Federal Reserve's reluctance to cut the federal funds rate, gold usually struggles, but not in 2024. Thanks to rising geopolitical risks, high demand from central banks and China, as well as the slowing US economy and ballooning deficit and national debt, the precious metal has managed not only to withstand headwinds, but also to gain about 13.5 in value since the beginning of the year. Donald Trump's dominance in the presidential debates pushed exhaust quotes above 2340. The return of the eccentric Republican to the White House is good news for gold, for several reasons. Therefore, the growing popularity of the 45th president contributes to strengthening the precious metals positions. Donald Trump intends to extend the tax relief program he introduced in 2017 to all Americans, not just those earning less than $400,000 a year, as Joe Biden requires. The U.S. Congressional Budget Office already predicts an increase in the budget deficit to 7s of GDP and a rise in national debt to GDP to 99. The state of government finances will deteriorate even further under a Republican administration, which will support gold. Donald Trump threatens to raise tariffs on American imports for all countries to 10, and for China, up to 60. This will complicate the already tense relations between Washington and Beijing and lead to the resumption of a trade war. From 2018 to 2020, when such a confrontation between the U.S. and China took place, gold surged sharply, even despite the Fed's rate hikes until mid-2019. According to research by the Peterson Institute, Donald Trump's proposed tariffs on imports could lead to economic losses amounting to 1.8 of GDP, not even accounting for China's retaliatory actions. This is excellent news for gold as a safe haven asset. Thus, a reduction in the federal funds rate could lead to increased ETF reserves. And Donald Trump's return to power would be excellent news for exhaust due to the increase in deficit and national debt, as well as the slowdown of the U.S. economy and the escalation of relations with China. Technically, the daily gold chart shows a rise in quotes towards the upper boundary of the triangle near the pivot level of 23.50, $1 per ounce. A successful breakout will allow the long positions formed at $23.40 to grow. The targets are $23, $80, and $24, $30 per ounce.